Covering today an article from Forbes, Real Estate Investing in 2024, What You Should Know. A couple good points in this article that mention trends we've been identifying. Article begins, persistent inflation, high mortgage interest rates, tight inventory in certain markets. There are many pressures and reasons why investing in multifamily and commercial real estate in 2024 keeps many investors on the sidelines. However, there are many reasons to invest at any time, whether in commercial properties such as office buildings, industrial properties, self-storage, and multifamily, or smaller residential assets such as vacation homes and single-family rentals. Going on in the article, rentals are going strong. Consider that homeownership remains out of reach for many young people or those who live in expensive metro markets with a high cost of living. This trend created more competitive rental markets across the country in the past couple of years. However, the high price of buying and owning a home may fuel continued or increased demand for rentals for the foreseeable future. Yes, there is a housing shortage out there, and this does create some opportunities, including in the multifamily sector. Going on, commercial and multifamily distressed. Post-pandemic, many commercial buildings are now distressed properties with landlords seeking tenants for empty offices and hotels trying to bounce back and fill rooms. Completion of large multifamily projects has increased supply, which has begun affecting vacancy rates, although some developers are choosing high job growth markets for the projects and tenants. High supply and flatter rental rates are forecast to contribute to elevated vacancy rates and instability in the multifamily sector this year. And office buildings had an 18% vacancy rate in January nationwide, a year-over-year increase of 130 points. Two things I'd point out here is differences between metros can be pretty stark. And also, in terms of multifamily, we're really seeing that increase of supply more at the high end of the market. Developers are really focusing with high material costs, high labor costs on getting the most they can in terms of dollars per square foot. And that's largely Class A, it's largely luxury apartments, high-end apartments. In workforce housing like Class C, we're just not seeing much supply coming into the market for that, not low quality buildings, but for those buildings that are focused more on blue collar workers. It's a different picture there where we're not seeing the same kind of supply issues. And we're actually seeing a pretty drastic undersupply in some markets there. Going on in the article, all these factors result in poor cash flow, and many loans are maturing now or within the next few weeks. These properties are ripe for investors with cash on hand to inject much needed capital to take on high interest debt service, tackle capital improvements, or purchase properties outright. Here, I'm going to stress another trend or factor we've been talking about, and that is high quality properties with problem models. So, this is something that really can create a nice opportunity for investors if you can identify it. And by that, I mean a property that's a good property in terms of in a good market where it has rental interest, where tenants want to be in it, but it might have a bad model. They didn't bring in enough money to do improvements or maintain the property. The people who did the financial model might have predicated it on really low cost interest rates or even adjustable rates, and now they're having trouble financing it. So if you could find a property where it was a bad model, but a quality property, that can really create an opportunity for investors and buyers to go in there, adequately capitalize it, structure it with the right kind of debt or all cash, or and make sure that there's enough cash there for any needed CapEx on the property. And that can create a real good opportunity if you can identify those kind of quality properties with bad models as opportunities. Rest of this article kind of deals with some of the risks of investing in commercial real estate, how to do it in a self-directed IRA. Um, but I wanted to kind of just highlight some of the points in this article, just back up trends we have been seeing, including um, the lack of supply, especially in multifamily when it comes to more workforce housing, and also the housing shortage we're continuing to see in the country. And, this is one of the few articles I've seen that's really kind of pointed to the issue you have with some good quality properties that really had bad models that weren't adequately capitalized or whatnot, creating opportunities. Hope you enjoyed the article, found it useful. Click subscribe if you haven't already. Give us a thumbs up. Appreciate it. Thanks a lot. Bye.